Hello everyone, welcome to our exploration of the financial world. Bill Nye here, ready to break down some complex concepts for you. Today we're diving into real-world assets, or RWAs, a topic that's becoming increasingly important in the world of finance and technology. These are valuable things you can see and touch, assets that exist in the physical world, like houses, the places we live and invest in, paintings, masterpieces that appreciate in value over time, or gold bars, a classic store of value, and a hedge against economic uncertainty. But RWAs also include less tangible things that represent ownership or value in a more abstract way, like company stocks representing a share in a business and its potential profits, or government bonds, loans to a country that pay interest over time considered a safe investment. These are all assets with real value in traditional finance, the backbone of our economic system. They're the gears of our global economy, driving growth and facilitating trade around the world. They play a crucial role in storing wealth and generating income for individuals and institutions alike. Historically, trading these assets has been slow, exclusive, and full of paperwork, making it difficult for the average person to participate. Want to own a piece of a skyscraper, a symbol of modern commerce and urban development? Or a famous painting, a timeless work of art admired by millions? Good luck, it's not as easy as it sounds. There are lots of middlemen and red tape involved, making the process cumbersome and expensive. This inefficiency keeps many people out of the market, preventing them from accessing these valuable investment opportunities, and ultimately locks up value, preventing it from being used more efficiently. But now, technology is changing everything, offering new ways to access and trade these assets. Imagine buying a slice of a building, owning a small fraction of a large commercial property, or art, investing in a piece of cultural history without needing to be a millionaire. Imagine doing it as easily as ordering pizza online, with just a few clicks on your phone. This is the promise of tokenizing real-world assets, of connecting our physical world with the digital one, creating new opportunities for everyone. Let's see how it works, and explore the exciting possibilities that RWAs unlock. In today's rapidly evolving digital landscape, the concept of physical assets existing solely in the physical realm is becoming increasingly outdated. We're entering an era where the digital and physical worlds are converging, creating exciting new possibilities for ownership, investment, and accessibility. How do we put a building on the internet? How do we bridge the gap between bricks and mortar and the boundless potential of the digital sphere? Through tokenization, this innovative process is revolutionizing how we perceive and interact with real-world assets. Think of a token as a digital certificate, a unique and verifiable representation of ownership or rights. A digital twin, a virtual replica that mirrors a physical asset in the digital world. This digital twin proves you own part of a real-world asset, be it a building, a piece of art, or even a commodity. It's a secure and transparent way to represent ownership in the digital age. Imagine a pizza. Instead of handing out messy slices which can be uneven and difficult to manage, you create digital pizza tokens, each representing a share of the whole pie. These tokens offer a clean, efficient, and easily divisible way to distribute ownership. These tokens can be traded instantly and securely on a blockchain network, while the pizza stays put, perfectly preserved and ready to be enjoyed. First, the asset's value is meticulously determined through a professional appraisal, and all legal ties are firmly established to ensure a solid foundation for tokenization. Then, digital tokens are created, representing fractional ownership of the asset. Say a $10 million building is divided and becomes 10 million tokens, each representing a small piece of the overall value. Suddenly, anyone can own a fraction of something big, breaking down traditional barriers to entry and democratizing investment opportunities. Skyscrapers, rare art, even gold bars, assets that were once exclusive to the wealthy, become accessible to thousands of individuals, regardless of their financial background or geographic location. Tokenization bridges old-school finance, with its established institutions and traditional processes, and the fast, global digital world, creating a seamless and efficient ecosystem for asset ownership and transfer. It makes value flow as freely as information online, enabling instant transactions and borderless investment opportunities. This is the foundation for a new way to own and trade assets, a paradigm shift that is reshaping the financial landscape. The process is secure, transparent, leveraging the power of blockchain technology, and opens up new possibilities for investors and asset owners alike. Let's see where these tokens live and how they are managed within the digital ecosystem. Digital tokens live on a blockchain, a super secure, distributed ledger. Think of it as a public record book, shared across thousands of computers worldwide. No single person controls it, making it transparent and fair. Every transaction is recorded as a block, chained together in order, hence blockchain. Each block is locked with cryptography, making tampering nearly impossible. It's like carving trades into stone for all to see, permanent and unchangeable. This means token ownership is clear and tamper-proof. No need for banks or central authorities, the network verifies everything. Blockchain security and transparency make RWA tokenization possible. Without it, digital tokens would be just lines of code, easily altered or deleted. With blockchain, trust is built into the system. Why bother tokenizing assets? The first big benefit is liquidity. Selling a building takes months. Selling tokens can take seconds, unlocking value instantly. Next is fractional ownership. Now anyone can invest small amounts in big assets. This democratizes access, letting more people build wealth. Tokenization also slashes costs and boosts efficiency. Smart contracts automate trades, cutting out middlemen and reducing fees. Transactions happen 24/7, not just during office hours. Transparency is another win. Every trade is recorded on the blockchain for all to see. This reduces fraud and disputes. Ownership is provable. In short, tokenization makes assets more liquid, accessible, efficient, and transparent. It's a game changer for how we interact with value. The old barriers are coming down. Let's look at real-world examples. Let's dive into the practical applications and see tokenization in action. We're going to explore how this innovative process is revolutionizing various industries, making assets more accessible and liquid than ever before. We're starting with real estate, a sector ripe for disruption. Imagine a company that owns a stunning $5 million apartment building. They can tokenize it, dividing its ownership into 5 million digital tokens. This process essentially transforms the building into a digital asset. Now, investors from all corners of the globe can easily buy these tokens, gaining fractional ownership of a high-value property. As tenants pay rent, token holders earn a proportional share of the rental income, creating a passive income stream. Tokenization isn't just for large properties. Even single-family homes can be tokenized, opening up new financial avenues for homeowners. This allows homeowners to access their home equity without the complexities and costs associated with traditional loans, providing much-needed financial flexibility. And when the time comes to sell the house, token holders receive their share of the sale proceeds, reflecting the increased value of their investment over time. Art is another fantastic example of an asset class benefiting from tokenization. Consider a museum that owns a priceless painting. They could tokenize it, offering a portion of its economic rights to the public. For instance, they might sell 49% of the painting's future value as tokens, while retaining the majority control and physical possession of the artwork. This allows art lovers to own a piece of a masterpiece and easily trade those tokens on digital marketplaces as the artwork's perceived value fluctuates, creating a dynamic and accessible art investment ecosystem. But the reach of tokenization doesn't stop there. It's rapidly spreading to areas like private equity, fine wine collections, exclusive luxury watches, and even the increasingly important realm of carbon credits. Tokenizing carbon credits makes them significantly easier to trade and manage, and allows for transparent tracking on a global market, fostering greater environmental responsibility. In essence, any asset with clearly defined value and verifiable ownership can be tokenized, unlocking its potential for broader participation. This groundbreaking approach opens up entirely new avenues for individuals and institutions to invest and actively participate in a wider range of markets. The possibilities are expanding at an exponential rate, promising a future where asset ownership is more democratic and accessible than ever before. But with all this potential, what about the challenges and potential pitfalls that lie ahead? Let's take a closer look at the hurdles that tokenization faces as it continues to reshape the financial landscape. As promising as tokenization is, there are real challenges. Laws about ownership weren't designed for digital tokens. Regulations are still catching up. Security is another concern. If you lose your digital wallet key, you could lose your asset. We need better, safer wallet technology and user education. The link between digital tokens and physical assets must be trustworthy. Reliable custodians and data feeds are essential. Scalability and interoperability are hurdles too. Blockchains must handle millions of transactions and work together smoothly. Solving these issues is the next big step. Who benefits from RWA tokenization? Almost everyone. Big investors and asset managers gain efficiency and unlock capital. Small businesses can raise funds by tokenizing equity or invoices reaching global investors. Everyday people, teachers, students, firefighters, can invest in assets once reserved for the wealthy. This democratizes finance and helps more people build wealth. Creators and communities can fund projects by selling tokens, like artists sharing profits or communities buying local landmarks. Even green energy projects can be funded by selling tokens to supporters. Tokenization empowers individuals and groups to own and manage what matters to them. The financial world is opening up. Let's talk about how you can get involved. Excited to join in? Start with education. Learn about blockchains, wallets, and platforms. Never invest in what you don't understand. Explore regulated platforms that vet assets and provide secure marketplaces. Look for transparency, legal backing, and strong security. Browse available assets before investing. When you're ready, start small. Only invest what you can afford to lose. Hands-on experience is the best teacher. As you learn, diversify, and manage risk. Security is crucial. Use strong passwords, enable two-factor authentication, and protect your wallet's private keys. Write down your seed phrase and store it safely offline. Remember, you're your own bank. Freedom comes with responsibility. Be curious, cautious, and secure. Now, what does the future hold? We're at the start of a major transformation. Tokenization is rewiring our economy. Soon, everything from sports teams to infrastructure could be tokenized. Imagine seeing all your assets, digital and traditional, in one app, trading globally, instantly. This could unlock trillions in value and make ownership more accessible. But we must ensure these systems are fair, sustainable, and protect users. The future is ours to build. Let's shape it together.